Now, I want you to remember all the way back to the start of the year to FM1. We've done FM1 and FM2. Do you remember what FM1 was? It was financial. Well, all of the FMs are financial. The specific one was earning and managing money. Okay. Now, one of the things you remember, I hope, is that we looked at this idea of net income. Net income. Okay. Does anyone remember what net means in this context? Okay, so it does mean after some stuff's been taken out. Okay. We would usually talk about the fact that it's the gross. Take away the deductions. Very good. Now, in FM1, the reason why we thought about that was because if you want to manage your money, your gross income is not a useful number to you. Because you're like, yeah, I've got my gross income, but a lot of that money I can't access because it gets used up by this and this and that and the other. Okay? So it's like, look, net income, that's the real figure that's going to be important to you because that's what I can like use to travel or to save up for something or buy a car or whatever it is. Okay? So that was the context of an income. But right now, we're going to take the same idea and just look at it in the context of tax. We give these slightly different names. Okay? So we would say the taxable income, right, which for our intents and purposes is basically parallel to net income, is not your gross income, but your, I know it's very, very subtle, it's your total income, and we're still going to subtract deductions. Okay? Now, this subtraction of deductions, we're really familiar with that. All the different costs that get removed from your total income, things like if you're giving to charity, if you've got salary sacrifice, those kinds of things. But total income, just as a reminder, isn't just necessarily from a job, right? Where else could you get money from apart from just a job?
Youth allowance.
Okay, youth allowance, good. Something else? So that's, yes, any kind of Centrelink social payment? Yeah, very good. So if I own a property apart from the one I'm living in, right, I'll be renting that out, which means I will be getting income from that. Does that make sense? And I'm going to have to pay tax on that. Is there anywhere else I could get income from apart from my job and like investment properties and rental income that I get? Where else could I get?
My parents.
Inheritance.
Okay, your parents, inheritance. Most of those don't come as like a regular annual thing, though. Generally.
Wait, can you get it from like,
I get
you
a
know when you get like you claim tax at the end of the year, like for like
Tax
certain
returns.
things? Yeah,
Okay,
exactly.
okay. So we'll talk about tax returns in a second. I will get to that. But for reasons that will become clear, that actually doesn't come into total income. I will say one last one that's important, and that's bank interest. Now, most of us don't think about that, because I don't know if you remember, like when I had a bank account, like this is back in the days when you got your, I had a $Dollarmite account, and you get your, this is pre-email, right? So you get all of your account statements in the mail, and I'd get one at the end of the month, and I'd be like, wow, I made 7 cents of interest this month. Yes, you know? So we don't think about it very much. But fairly quickly, you guys will have an amount of income where it is relevant. So that's what we mean by total income. Okay, just so we're ready to proceed. Taxable income, this matters to us, okay? When you work out your taxable income, as you can imagine, well, that leads to how much tax you have to pay, right? Your income tax, right? Now, it's very important that you get that tax, right? Because it's sort of inconvenient. Can you imagine if you're getting your total income all the way throughout the year, and then you get to the end of the year and you're like, oh no, I had this huge amount of tax that I owe the government, and I've been kind of spending all my money, and I can't pay the government back, right? That would be a big problem, especially like someone like me. I pay like, I don't know, it's $30,000 to $40,000 in tax every single year. I'm kind of screwed if I end up every single year on year, racking up that amount of debt, right? So the government and all employers are kind of forced by the government to fix this by doing something instead of tax.
This is general.
Yes, it is.
I mean,
Yeah, it is. Captain Obvious saves the day. We introduced this thing, or the government introduces this thing, called Payg tax. Does anyone know what Payg stands for? Okay, good. So, what does that mean though? What does that mean?
Okay,
Okay, good. So in other words, the government's like, ha ha ha, I don't trust you to save up $30,000 to $40,000 all the way throughout the year. I'm just going to take it off you as we go. Every time you get paid, I'm just not going to pay you the whole amount. Okay? But here's the thing. The government doesn't know what your deductions are going to be because everyone's is different. Right? Does this make sense? So Payg tax is kind of like, well, it's not kind of like, it is, you should write this. It's an estimate of total income tax. Okay? It's an estimate of total income tax.